You're certainly having tightening spreads coming through from the banks for their back leverage programs. We're seeing a lot of strong competition coming in from the CMBS markets that are coming back into Europe. I think there's a lot of room still for efficient and quick delivery of capital.
Shaun,
Hi.
Pleasure to have you here today. We are here in London, a few hundreds of participants talking about credit and debt and talk about real estate industry here all over Europe. But before we go there, I would like to ask you to start by explaining to our audience your role at Affinius Capital, please.
My name is Shaun Connery. I'm the head of European credit for Affinius Capital, covering off all of our credit investments across Europe, as well as some of the capital markets roles on some of our equity businesses.
How is the tightening of traditional bank credit creating space for private credit funds, insurance capitals, and other non-bank players to dominate real estate financing?
So I think there's some interesting interplay going on at the minute. You're certainly having tightening spreads coming through from the banks for their back leverage programs, which is based on some of the regulatory changes that have come through into the marketplace. And we're seeing a lot of strong competition coming in from the CMBS markets that are coming back into Europe. And we're seeing, a renewed interest in private credit generally across the board, so we're seeing a fair bit of investment coming in, which is bringing in a lot of new capital into the private credit space. I think there's a lot of room still for efficient and quick delivery of capital. Certainty is absolutely key and essential to all of our sponsors out there. So to have somebody coming in who knows the marketplace, who has development expertise as we do across the equity business, and is able to really truly understand the deals and the progress that they're trying to put in place, I think that's very important for our sponsors to come in and to rely on us to be able to provide that capital source.
And how are private lenders positioning themselves in the capital stack, and what risk returns profiles are they targeting?
So there's a real variation on that. And a lot of it depends on the capital coming in to invest with non-bank lenders. I mean, I think you've got a lot of insurance capital, which is clearly getting tighter spreads, and that's based on the regulatory position that they're in as well. And then you're pushing right up through the risk curve where you get into well to double digit and to even to 20 plus returns, depending on where people are positioning themselves. So I think it's a real variability across the stack, and there's a lot of optionality for where the non-bank lenders want to play in that space.
Are we moving towards competition or more complementary? How banks and private credit platforms collaborate through co-lending models?
Yeah, so I think it's interesting when people talk about the non-bank lenders coming in and the share of the type of lending that they're taking over, and then increasing market share across Europe. I think the one thing to remember on that is a lot of that is dealt with, has the banks as back leverage providers in the background. So whether that's an AB structure, a senior mezz structure, or a whole loan with a loan-on-loan position being put in place, there's still a bank being involved. So effectively, you still have collaboration across all of those pieces to it. So I think you're seeing a lot of that, and you're also seeing some where some banks are now willing to lend alongside non-bank lenders, especially if there's a cheaper cost of capital for that non-bank lender. You're actually seeing vertical tranches being taken from the banks and the non-banks. So there is a lot more collaboration coming into the business. I think that'll continue.
And what hurdles remain, and how can non-bank lenders institutionalize their presence as a permanent source of real estate capital rather than just a cyclical response?
There's always going to be a place for true on-the-ground expertise, and particularly when it comes to things like development and higher leverage type of lending, where you're going to want to have people who have an equity knowledge that's in place. So I think non-bank lenders provide that in a lot of ways by having a mix of equity and debt provisions that are being made across that space. So I think that's going to be an important piece for that to stay. There's also just generally the risk factors that come in with balance sheet lending and with insurance type capital, where you do have regulatory oversight that comes into those kind of pieces. So non-bank lenders can be well positioned if they really truly understand the regions and the areas they're lending into, to have that sort of competitive advantage against those sources of capital.
Final one. We know that the panels are interesting, the discussions, you guys can interact a lot, but I used to say that the real magic happens during the coffee breaks.
Sure.
Small gatherings, you guys talking in a very informal way. And I wonder if you can share with us here, what topics are part of the conversation right now? What are you guys talking behind the scenes?
It's a question as to maybe some more openness we can have on what our true kind of insights are for the next year and what we're actually focused on, and seeing if we can find ways to work together and collaborate on various pieces. So you can't always discuss that openly in wider forums, but when there's people that you have long-standing relationships with, and you can actually kind of dig down into some things that they're seeing on a local level and try to find ways that you can then work together. And I think that's one of the best parts of this, is to try to find collaborative ways to connect and reconnect with people that you've known for many years, and new people that you're meeting at these types of places as well.